Today, we will talk about how to get financial freedom. We all know the feeling, the panic that sets into your stomach when you see the bill for an unexpected car repair. How are we going to pay for that? But what if a car repair was just an inconvenience? Instead of worrying, you pay the bill without thinking twice. What is financial freedom? Financial freedom means you get to make life decisions without being overly stressed about the financial fallout of those decisions. That's because you're financially prepared for whatever life throws your way. You have no debt, you have money in the bank, and you're investing for the future. In other words, you control your finances instead of being controlled by them. When you have financial freedom, we prefer to say financial peace. You have options. You don't have to wonder if your bank account can handle replacing your hot water heater or buying groceries for a single mom who just lost her job. 1. Learn how to budget. You won't get ahead if you don't have a plan for your money. Instead, you'll find yourself wondering where your money went at the end of every month. That's not financial independence. That's a recipe for financial disaster. Financial freedom is impossible if you're not living on a budget. You got to tell your money where to go, or you'll end up wondering where it went. Give every dollar an assignment before the month begins and track your spending throughout the month. If you consistently overspend or underspend in certain areas, you can always adjust the amount in those categories. Budgeting is important to get your finances on the right track, but it doesn't end there. Even once you achieve financial freedom, you'll still complete a unique budget every month. No matter how much money you have, you need a plan. 2. Get debt out of your life for good. If you have debt like credit cards, student loans, or car loans, it's time to kick it to the curb. Why? Because as long as you're sending hundreds of your hard-earned dollars in debt payments to banks and lenders every month, you'll never truly experience financial freedom. Your income is your most powerful wealth-building tool, and you won't reach your money goals if all you've got to work with are bits and pieces left over after you pay credit card bills and student loan payments. Paying off your debt helps you lay a foundation to build wealth that will last. Make sure you have $1,000 saved and put aside for emergencies before you start tackling your debt. You don't want an unexpected expense to derail your progress. Most people feel like they got a raise when they start budgeting, so that's good news for you. Throw all of that extra cash at your smallest debt until it's gone. Then keep the snowball rolling. Paying off debt is hard work, but there's nothing like the feeling of actually keeping the money you bring in every month. 3. Set financial goals. Everybody dreams about achieving financial freedom. It's a great dream, but a dream without a goal is just a wish. That's why setting financial goals, like getting out of debt or saving up for retirement, is so important on your journey to financial freedom. They give you something to work toward. Let's say you really want to get out of debt. That's a fantastic goal to have, but that's not enough. How much debt do you want to pay off? Is it $20,000? Good, now we're getting somewhere. When do you want to be debt-free? How does 12 months sound? Done. And just like that, you now have a specific measurable goal that's personal to you with a hard deadline attached to it. I want to pay off $20,000 worth of debt in 12 months. Now, all you have to do is write it down and keep it front and center as you go after it. 4. Be smart about your career choice. As we said before, your biggest wealth-building tool is your income. So when it comes to choosing a career, there's a lot at stake. Don't stay stuck at a dead-end job, especially if it's making you miserable. Find a job you enjoy that also supports your goals of financial security, so you can enjoy the journey. Your choice of career can have a big impact on your long-term financial plan, so take it seriously. Want to learn more about discovering and doing work that gives you both a great income and big impact? Check out From Paycheck to Purpose, The Clear Path to Doing Work You Love, the latest book from best-selling author and career expert Ken Coleman. 5. Save money for emergencies. If your goal is financial freedom, you need a fully funded emergency fund. It acts like a buffer between you and the unexpected life events that happen to all of us, like car repairs, broken appliances, and medical deductibles. That's why you should increase your emergency fund to cover 3 to 6 months of expenses once you're out of debt. Having the cash on hand to cover an unexpected life event gives you peace of mind and is a critical part of your overall financial plan. Once you have that fully funded savings account, you'll start to feel more flexibility in your budget. You'll be able to say yes to shopping splurges and specialty lats with no guilt at all. 6. Plan for big purchases. Since you're not taking on debt, you'll also need a savings plan for big purchases that aren't emergencies. Let's take summer vacation, for example. It's simple. Create a line item in your monthly budget and divide the total amount your vacation will cost by the months you have to save. You're not living in debt anymore, and that means you can enjoy your vacation instead of having a credit card bill follow you home. With a full emergency fund and a plan to cover big purchases in place, you'll have the financial foundation to start investing. 7. Invest for your retirement future. Now that you have a plan for short-term savings, you're ready to partner with a financial advisor who can help you make the most of your long-term investment options. The good news is the sooner you start investing, the more time your money has to grow. That's the power of compound growth at work. Here's how to get started. Start by taking advantage of the tax-favored retirement accounts available to you at work, like your 401 or 403. According to the National Study of Millionaires, 8 out of 10 millionaires invested in their company's 401 plan, which played a key role in their financial success. 8. Look for ways to save money. If you haven't taken a good look at exactly what you're spending your money on every month, it's time to dig into your spending habits. It's easy to go through the hustle and bustle of life and forget about that gym membership you signed up for at the beginning of the year, but haven't used in months. Or all those streaming services you signed up for, even though you only watch a couple of hours of television each week. And guess what? Even though they've achieved financial freedom, more than 93% of millionaires still use coupons to save money on their purchases. Turns out saving money is a hard habit to break. 9. Live below your means. In other words, you got to live on less than you make. This goes right along with having a budget. To reach financial freedom, you need to have self-discipline and be willing to say no to some stuff you can't afford to buy right now, so you can save more in the long run. Listen, we're not saying it's bad to have stuff or want nice things. We just don't want your stuff to have you. When you buy that car or that house with money, you don't have to impress people you don't even like. You'll constantly find yourself caught in the vicious cycle of debt and overspending. That's not a recipe for financial freedom. In fact, it's just the opposite. 10. Help your kids save for college. If you're already contributing 15% of your income to retirement and you want to start saving for your kids' college fund, you can start by investing in an education savings account, ESA. Like a Roth IRA, the money you contribute to an ESA grows tax-free, which means you won't pay taxes on it when it's used to cover college expenses. Currently, you can contribute up to $2,000 per year for each child in an ESA. Income limits to apply, and your investment pro can help you find out if those impact you. Today, we will talk about how to get rich with investing. If you want to increase your net worth, investing in the stock market is an excellent way to make that dream a reality. The stock market isn't just a get-rich-quick scheme. It can be a way to build sustainable wealth. 1. Develop an investing strategy. Your investment strategy is a set of rules or guidelines to help you decide when you should or shouldn't invest. Having a set strategy will keep you from making impulsive decisions out of hope or fear. Fundamental analysis and technical analysis are the two dominant types of investing strategies. Fundamental analysts concentrate on measuring what they believe to be a stock's intrinsic value. This investment style assumes the current stock price doesn't necessarily reflect the intrinsic value, and stock prices eventually correct themselves to match their true value. To determine the intrinsic value, fundamental analysts look at various metrics, such as price-to-earnings ratios, price-to-sales ratios, debt-to-equity ratios, PEG ratios, free cash flow, and much more. 2. Choose an investing style. In addition to choosing whether you want to be more of a fundamental or a technical analyst, you'll have to decide if you want to invest more actively or passively. Professional money managers run actively managed funds. These professionals actively rebalance funds holdings. Having actively managed funds means you can pass on some of your investing responsibility, but these funds can come at a high cost. Passive funds cost much less and still often have high returns. You'll also need to decide how aggressive you want your investments to be. Calculate how much you can afford to invest. Write down your goals, such as how much money you'll need for retirement. This will affect how aggressive your portfolio is, and it will also affect how long you plan to stay invested. You should have a more aggressive portfolio if you start investing at a young age, because the market will have time to correct itself from any downturns. As you approach retirement, you can transition your portfolio to a more conservative asset allocation. 3. Use index fund investing. Index funds follow a benchmark index, such as the S&P 500. Index funds are considered low risk because they are highly diversified. You can usually get an S&P 500 index fund or at another index for a low price and minimal fees. The expense ratio is low because the funds are passively managed. You're also saving money because index funds are tax efficient. Since index funds have a low turnover ratio, they are more tax efficient than actively managed funds. Perhaps most importantly, index funds typically have high returns that beat most actively managed mutual funds. When choosing an index fund to invest in, make sure to compare expense ratios. A powerful way to leverage index fund investing comes from using Plink, a beginner investment app that simplifies the self-directed investing experience for newcomers by assisting you to invest into low-cost index funds and other investments. The service simplifies how you invest by curating investment recommendations on your behalf as you contribute money to your account, be it one time or on an ongoing basis. 4. Buy and sell individual stocks. Buying and selling individual stock shares gives you the opportunity for much higher returns than buying funds with many stocks. With today's competitive brokerages, you can buy stocks commission-free. Plus, it's a highly liquid investment, and it also gives you more control to make your portfolio look exactly how you want. You have the power to buy and sell at any time, as long as the market is open or your brokerage allows after-hours trading. Today, many platforms will even allow you to buy fractional shares, meaning you can always have your money fully invested. Since you control capital gains timing when you buy and sell, stocks are more tax efficient than mutual funds. You can make vast amounts of money, but only if you choose the right stocks. You might start with companies you've heard about already. While it's essential to conduct your stock research, you need a starting point to know which stocks to analyze. Consider getting advice from expert stock picking services on which stocks you should check out. 5. Buy and hold quality stocks and ETFs. Buy both stocks and ETFs to help keep your portfolio diversified. Once you've found stocks and ETFs that fit your purchasing criteria, hold on to them. You can try to time the market in terms of stock prices, but it's usually wiser to hold long-term investments than to be constantly buying and selling. There might be downturns, but the market generally rises and quality, long-term investments tend to beat the market. Holding will stop you from making emotional trading decisions. For most people, long-term investments are taxed at a lower rate than short-term investments, and short-term capital gains are taxed as a person's ordinary income. As far as taxes are concerned, long-term investment counts as anything you hold longer than a year. But to earn as much wealth as possible, you will want to hold longer than that. Some stock-picking services recommend you hold for a minimum of 5 years. When possible, you should try to keep investments you've researched and believe in for even longer. If you hold dividend-paying stocks and ETFs, you can set it to reinvest your earnings automatically. By reinvesting your earnings, you end up owning more of the stock than you originally bought. However, if you need some of your earnings sooner, you can get your dividends deposited into your account and use it as a passive income right away. 6. Contribute money consistently. Whether the market is up or down, you should continuously add money to your investment account and purchase more shares, whether fractional shares or whole ones. The strategy of periodically investing more money, regardless of how the current market performs, is called dollar cost averaging. Dollar cost averaging aims to limit the impact of volatility on your overall portfolio. Plus, it can save you time and take some of the guesswork out of investing. You won't have to stress about whether you're timing the market well or not. Many folks have automatic payments sent to their brokerage account each month or couple of weeks, either directly from paychecks or a checking account. Once the money lands in your account, you can buy more shares of your current holdings or add new investments to your portfolio. An additional benefit from doing this comes from making investing part of your regular budget, rather than something you toss extra money into when you have it. The more capital you invest, and the sooner you invest it, the richer you can become. 7. Day trade. If you're a nimble and proficient trader, probably the easiest way to make fast money in the stock market is to become a day trader. A day trader moves in and out of a stock rapidly within a single day, sometimes making multiple transactions in the same security on the same day. For investors with a good understanding of market trends and the ability to anticipate or decipher financial results of particular companies, money can be made in day trading. However, the average day trading investor typically loses money. In fact, anecdotal estimates suggest up to 95% of day traders lose money. And even worse, they continue day trading. There is definitely money to be made as a day trader, but generally it's best left to the professionals. 8. Dabble in meme stocks. The so-called meme stocks that rose to prominence over the past few years, such as GameStop and AMC Entertainment, provided fantastical gains for some shareholders and equally devastating losses for others. GameStop, for example, jumped 400% in a single week in January 2021, while AMC Entertainment posted an unfathomable 1,183% gain for the full year. Investing in these types of companies isn't a solid long-term financial plan, and you certainly shouldn't devote any significant portion of your portfolio to them. However, if you're looking for stocks that can make huge moves in a relatively short period of time, these are areas you could investigate. Today, we will talk about how to create cash flow. 1. Stock investments. Perhaps the most intimidating of the bunch, investing in stocks doesn't have to mean risking your life savings. In fact, there are many stock investment options that aren't as volatile and have inherently less risk. Dividend stocks are one type that generates passive income. This is when you invest as a shareholder in a company and the company pays out dividends to its shareholders. There are some dividend ETFs out there like SRET, DIV, SDIV, etc., which have a yield of 7% and above. At the time of this writing, this means every $10,000 an entrepreneur invests, $700 at a 7% yield will be paid back in dividends. 2. Affiliate marketing. With affiliate marketing, website owners, social media influencers, or bloggers promote a third party's product by including a link to the product on their site or social media account. Amazon might be the best-known affiliate partner, but eBay, Owen, and Sherry Sale are among the larger names too, and Instagram and TikTok have become huge platforms for those looking to grow a following and promote products. When a visitor clicks on the link and makes a purchase from the third-party affiliate, the site owner earns a commission. The commission might range from 3 to 7%, so it will likely take significant traffic to your site to generate serious income. But if you can grow your following or have a more lucrative niche, such as software, financial services, or fitness, you may be able to make some serious coin. Affiliate marketing is considered passive because, in theory, you can earn money just by adding a link to your site or social media account. In reality, you won't earn anything if you can't attract readers to your site to click on a link and buy something. 3. Sell photography online. Selling photography online might not be the most obvious place to set up a passive business, but it could allow you to scale your efforts, especially if you can sell the same photos over and over again. To do that, you might work with an organization such as Getty Images, Shutterstock, or Alamy. To get started, you'll have to be approved by the platform, and then you license your photos to be used by whoever downloads them. The platform then pays you every time someone uses your photo. You'll need photos that appeal to a specific audience or that represent a certain scene, and you'll need to tease out where the demand is. Photos could be shots with models, landscapes, creative scenarios, and more, or they could capture real events that might make the news. 4. Dividend stocks. Shareholders in companies with dividend-yielding stocks receive a payment at regular intervals from the company. Companies pay cash dividends on a quarterly basis out of their profits, and all you need to do is own the stock. Dividends are paid per share of stock, so the more shares you own, the higher your payout. For example, companies issuing a very high dividend may not be able to sustain it. Graves warns that too many novices jump into the market without thoroughly investigating the company issuing the stock. You've got to investigate each company's website and be comfortable with their financial statements. You should spend 2 to 3 weeks investigating each company. That said, there are ways to invest in dividend-yielding stocks without spending a huge amount of time evaluating companies. Graves advises going with exchange-traded funds, or ETFs. ETFs are investment funds that hold assets such as stocks, commodities, and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, it doesn't affect the ETF's price or dividend too much. Here are some of the best ETFs to choose from. ETFs are an ideal choice for novices because they are easy to understand, highly liquid, inexpensive, and have far better potential returns because of far lower costs than mutual funds. Creating an app could be a way to make that upfront investment of time and then reap the reward over the long haul. Your app might be a game or one that helps mobile users perform some hard-to-do function. Once your app is public, users download it, and you can generate income. An app has huge upside. If you can design something that catches the fancy of your audience, you'll have to consider how best to generate sales from your app. For example, you might run in-app ads or otherwise have users pay a nominal fee for downloading the app. If your app gains popularity or you receive feedback, you'll likely need to add incremental features to keep the app relevant and popular. You'll also want to make sure that if your app collects any data that it's in compliance with privacy laws, which differ across the globe. The popularity of apps can be short-lived too, meaning your cash flow could dry up a lot faster than you expect. 5. Start a blog or podcast. The most important method for generating passive income is to start a blog or podcast. Bloggers and podcasters can generate a tremendous amount of income, but not quickly. If you plan to start a blog or podcast, understand that it's going to take a vast amount of work, time, and equipment to succeed. 6. REITs. A REIT is a real estate investment trust, which is a fancy name for a company that owns and manages real estate. REITs have a special legal structure so that they pay little or no corporate income tax if they pass along most of their income to shareholders. You can purchase REITs on the stock market, just like any other company or dividend stock. You'll earn whatever the REIT pays out as a dividend, and the best REITs have a record of increasing their dividend on an annual basis, so you can have a growing stream of dividends over time. Like dividend stocks, individual REITs can be riskier than owning an ETF consisting of dozens of REIT stocks. A fund provides immediate diversification and is usually a lot safer than buying individual stocks, and you'll still get a nice payout. Just like dividend stocks, you'll have to be able to pick the good REITs, and that means you'll need to analyze each of the businesses that you might buy. A time-consuming process. And while it's a passive activity, you can lose a lot of money if you don't know what you're doing. Like any stock, the price can fluctuate a lot in the short term. REIT dividends are not protected from tough economic times either. If the REIT doesn't generate enough income, it will likely have to cut its dividend or eliminate it entirely. So your passive income may get hit just when you want it most. 7. Create an online course. Have a technical skill you're confident in. Want to convey that skill to others out there while generating a healthy passive income stream. Creating an online course on Udemy is a great way to automate some of your cash flow. However, like any other income stream that's passive, it takes a significant amount of effort on the front end. There are so many things that can be taught through an online course. I opt to teach technical skills in my courses, such as how you could become a web developer or learn search engine optimization. But you can also opt to teach other skills, such as playing an instrument, learning a new language, becoming a photographer, and so on and so forth. 8. Start a dropshipping store. Dropshipping is one of the best passive income ideas to earn money from wherever you are, even if you don't have a lot of cash flow to begin with. Some dropshippers report making upward of $100,000 per year. Dropshipping is not a get-rich-quick scheme, however, as it takes some upfront investment of time in order to generate income. The dropshipping business model involves creating an e-commerce store where customers browse and buy products. What's interesting about dropshipping is that you don't have to see or physically manage the products you sell. 9. Stake cryptocurrencies. Investing in several cryptocurrencies, or staking crypto, can be a great way to earn anywhere from 5% to 10% in passive income. You can think of it as earning interest on your savings, except with higher returns. How do you get started? First, educate yourself on proof-of-stake cryptocurrencies and how you can get access to a crypto wallet. Then you want to learn about the different coins you can choose from to make an educated decision on which to invest in. Once you're ready, crypto exchanges like Kraken or Coinbase can be great places to buy crypto. Today, we will talk about how to make passive income. The best ways to earn passive income aren't only the purview of the wealthy. With a modicum of startup time and capital, anyone can create a passive income stream. 1. Dividend stocks. Buying dividend-paying stocks is a path to owning a portion of a publicly traded company. Many stocks pay a portion of their earnings to shareholders in the form of cash dividend payments. Dividends are usually paid quarterly. You have the option to reinvest the cash payment in additional shares of stock, or you can take the cash dividend payment. Long-term investors who build up a portfolio of dividend-paying stocks or funds have one of the best ways to earn passive income. A dividend exchange-traded fund, ETF, is an investment vehicle that owns many dividend-paying stocks. You can buy one investment, such as the SPDR S&P Global Dividend ETF, WDIV, and receive access to a portfolio of dividend-paying companies. The WDIV ETF owns global companies, which frequently pay higher dividends than U.S. firms. Many of the dividend ETFs screen for companies with a history of increasing dividends as well. The dividend ETF is another passive income investment, which provides regular cash payments along with an added bonus of capital appreciation potential. Consider management fees when choosing a dividend exchange-traded fund, as higher fund fees can detract from returns. Diversification is also important when investing in dividend stocks. Several types of investments can reduce risk and help you get the best returns possible. You should also consider reinvesting some of the dividends you receive to keep growing your investment portfolio. 2. REIT investing. A real estate investment trust, or REIT, is an investment vehicle that owns a pool of commercial real estate. There are REITs that provide broad diversification across the real estate landscape. Or you can buy niche REITs that own senior housing, student housing, warehouses, commercial property, mortgages, shopping malls, data centers, or many other varieties of property. The benefit of REITs for cash flow is that they are required by law to pay out 90% of their taxable income to shareholders. 3. Affiliate marketing. Affiliate marketers sell products and services on their website or social media accounts and receive a commission from the brand for the sale. Affiliate marketers frequently write reviews to draw visitors to their website. The setup for affiliate marketing is not passive and involves creating a website or social media platform, developing contracts with companies who pay affiliates, and writing content to draw visitors to the website. The passive aspect of affiliate marketing is that once the content is written and a website develops a stream of visitors, your work is diminished. That's only partially true, as you'll need to write new content and update old content in order to maintain and increase website traffic. Additionally, it can take months or more to begin to generate cash flow. We place affiliate marketing on the higher effort step of the passive income ideas ladder. 4. Buy real estate. One way to build passive income after you're debt-free and have some cash saved up is to buy real estate and rent it out to tenants. But before you buy a rental property, pay off your own home first and purchase your investment property with cash. Don't ever go into debt to buy rental property. It's also worth saying, a rental property can be a great source of extra income, but it technically isn't passive income. You've got to market it and keep up with maintenance and cosmetic updates if you want it to pan out as a source of income. It takes time and effort to decide how you'll rent out the property and how to manage it, unless you hire a property management company. But that would mean less income for you. 5. Dropshipping. One of the most lucrative forms of passive income is dropshipping. Dropshipping allows you to buy popular items from online stores and sell them to clients all over the world. You can stock your online store with products from different dropshipping categories, such as clothing, home goods, or beauty products. The beauty of dropshipping is that it allows you to create your own company and set your own prices for the goods. As a matter of fact, this is the one that offers you the greatest control over your margins out of all the passive income ideas on this list. Purchasing wholesale goods to sell in your store is also like a dropshipping business, but it gives you far more control over the product selection and quality. You can connect with local suppliers through a wholesale marketplace, buy goods at bulk rates, and promote them to your target audience. You can even locate wholesalers who are willing to deliver goods straight to your clients. 6. Create an app. This is an option for you if you have a brilliant idea for a mobile app and the knowledge to make one. The more users your app has, the more money you may make from it. Once you start making money from one app, it gets simpler to start new projects and earn more money. App development is a booming and fiercely competitive industry. You can have lasting success in the app market if you can provide something distinct and reliable. Even though the majority of the work goes into the initial conception, design, and construction of the app, you will need to make updates and changes throughout time to keep your audience interested. 7. Sell your photography. Photography is a solid way to earn passive income. You may earn a lot of money in the photography industry by selling your work on stock picture websites, in magazines, and by having canvas prints made for your clients. For instance, it would cost a lot of money to hire a photographer to find each model and set up the food props and lighting for a shot of a cheerful family enjoying dinner together. Finding one from a stock photography website and paying somewhere between a few cents and a few dollars would be much simpler and less expensive. 8. Write an ebook. After writing an ebook to make money passively, you need to consider the income you want. There are several ways to generate passive income online, such as creating a blog with affiliate links, selling digital products on marketplaces like Etsy or Shopify, and offering services through freelance sites. Once you decide which type of passive income is right for you, it's time to start brainstorming ideas for your ebook. Think about topics people would be interested in reading, something that will give them value while also making sure they can relate it to the keywords associated with your chosen type of passive income. For example, if you're focusing on blogging as a type of passive income, you may want to write an ebook about how to start a blog and make money with it. 9. Create a podcast. Creating a podcast can help you create passive income by allowing you to reach an audience that may not have been accessible with other forms of media. It also allows you to connect with your listeners more personally and develop relationships with them over time. Plus, creating a podcast is relatively easy. All you need is basic audio recording equipment, a microphone, and editing software. You can even record the podcast from the comfort of your own home or office. Once you've got the basics down pat, you can start monetizing your podcast through sponsorships and advertising deals. Offering advertisers exposure to an engaged audience can bring in additional revenue without spending much, if any, money up front. Additionally, you may be able to develop your products and services related to your podcast. This can further increase the amount of passive income that you generate. 10. Selling online courses. One of the best passive income ideas is selling access to courses or guides to an audience that needs such content. If you have expertise on any subject, this can become one of the best passive income streams for you. This can be a lot of work up front, but once an ebook or an online course is created and marketed, it can provide you with a passive revenue stream for years. Variations of it date back to the 4-hour workweek. However, this method of building passive income has evolved over the years. The money from the online course comes straight to you, and you can use it to promote your blog on the online learning platform.